Hello everyone, welcome back. Welcome to day 5 of the Simple Trade Profit System free training course. I hope you guys have enjoyed the first 4 videos already. I hope if you're new to trading, I hope that they've helped you start to build a strategy. If you've already been, are already familiar with trading, then I still hope, I'm sure you've learned something. So, this video is going to be a little bit shorter. We're not really going to go to the chart. I have a bunch of slides put together that I want to show you, but I think it fits really well with what we've been posting in the VIP group. Me and Drew about wedges and triangles and stuff. So today's video is about chart patterns and shapes. So this is really important because this is, once you learn these patterns, learn these shapes, then, they'll forever be a part of your trading strategy. And they are mine for sure. As you can see that we're posting stuff about triangles and wedges all the time. So let's get in here, and you guys can pause these videos, take pictures, take screenshots of all these, or maybe I'll post these pictures in the free chat. So I'm really just going to go through each of these with you guys. The first one is, here's a descending triangle. I'm not going to read all this, but it's essentially equal lows. The lows are equal, but the highs are getting lower and lower, as you can see here, which means that sellers are coming in. They're willing to sell here, then they're willing to sell here, then they're willing to sell here. Buyers are only able to drive price up to a lower high each time. This is a weak sign. This is a sign that the market could break down. The opposite is an ascending triangle, just inverse, where buyers are coming in and buying at higher levels. Sellers aren't able to drive price down. And then you have a symmetrical triangle, which is essentially, like a triangle like we know it, an even triangle. And those can typically, let's see, it says defined by lower highs and higher lows. This pattern is also known as a coil. I've never heard it called a coil. Ignore that. Upward breaks are about as likely as downward ones. Yeah. So it tends to be whichever direction the market is trending in is the way it will break. So you'll see these form. The market maybe is coming up in an uptrend like this, and then it'll form that triangle like this. And then since we are in an uptrend, it'll typically break to the upside. So there's one slide to take a look at. Here's the next one. Double bottom is where price comes down and hits the same spot. That could be support. Comes down, hits the same spot twice, and then bounces. I'm going to change my pen color to black. So it hits the same spot twice and then bounces up. Triple bottom, pretty self-explanatory, comes down, hits the bottom 3 times before rebounding. Head and shoulders, self-explanatory. It is defined by a shoulder, a head, a second shoulder, and this line across here is what they call the neckline. So this would be the area where price would come up and bounce from. So we come up, make a high, hit the neckline, make a higher high, hit the neckline, and then make a lower high. So these happen, pretty often. Keep an eye on these. But all these really happen pretty often. There's a couple of them that don't. We're going to skip past them. But yeah, take a screenshot of this and remember these. This one is, we're going to skip these two over. No, we're going to skip this one. I don't ever really see this one happening, but a broadening pattern. So rather than it being a triangle where we're getting lower on each side, this one is broadening out. And then a rectangle or a range. These can be prolonged and go for a long time. And I'm going to do a video specifically on ranges because I love trading ranges. And I really look for them all the time and trade level by level, range by range. So this is where price just literally bounces around inside a range with a high and a low, a resistance, a support, and we bounce around inside here. So when I'm in here trading in ranges, I'm selling at the high or buying at the low, and vice versa. The next one we have here is, I'm not going to talk about this one. A breakout that's really, it looks like it's probably a wedge, a descending wedge breaking out. You could also have it the opposite way, where you have a rising wedge where price is, it would look like this. So price coming up and squeezing in. So it's basically like a triangle, only it's more in an sloping upwards or sloping downwards. So it is a triangle shape, but you can see that it's sloping down, so they call this a falling wedge. And we're not going to talk about swing failure either, because I've never heard about that. All right, so the next one, I have several pictures on here that you guys can save. And I'm going to post these in the group, but we have several patterns on here. We have bull flags, pennants, cup with handle, ascending triangle, symmetrical triangle. I don't know much about the measured move up or the scallop or the three rising valleys. And then these are bullish patterns. Bullish means these are a sign that price could go up. And then you have bearish patterns, price going down. So you have a bear flag and a bear pennant. The descending triangle, the symmetrical triangle. And then you have here reversal patterns. This one we just talked about, the double bottom. This looks more like a range. And the head and shoulders too, which is a reversal, because head and shoulders form when price is going up. You form this head and shoulders, and then it reverses down, or it can be inverse. So it could look like this, an inverse head and shoulders, and that would reverse to the upside. So there's those. And here's another picture of these. So you have the falling wedge, you have the rectangle or the range, which I love ranges. The pennant here, the rising wedge. So you can see that rising wedge usually break down. Falling wedges typically break up. The bearish rectangle or bearish range and the bearish pennant. And then I'm going to share with you my two favorite ones, and it's the ones that we've been posting about more recently. The first one is the ascending triangle. I love spotting these. I love trading these. And like I said, they typically break up because buyers are coming in at higher lows, putting pressure on the sellers. The sellers aren't able to drive price down as far each time. And eventually, you basically fill up all the sell orders, and the sellers run out of orders, essentially causing price to shoot up. And what happens is, you'll have sellers that'll be selling up here, okay, and they have their stop loss set maybe a little bit higher. So what happens when price comes up and it hits those stops, those sell orders essentially turn into buy orders, which further sends the price up even more. And then my second favorite one, same one, descending triangle. Same concept, sellers coming in at lower highs, putting pressure on the buyers down here. They're not able to send price up as far each time before they run out of strength and the sellers drive the price down. So I'm going to post these all in the group. I know there's a lot of patterns here, so I didn't really want to go to the chart and look for 40 different patterns. I just wanted to get you guys some pictures. You guys can get them saved. And and as we see these form on the Bitcoin chart, we will definitely point them out to you, and then you can refer back to these pictures to, and we'll let you know which direction these typically break to and what we can expect. So hope this was informative, helps you guys out. I don't have every single one of these memorized. Sometimes I have to refer back to them, and so that's perfectly fine. So I will see you guys in day 6.